Hello and welcome to our first official State of Blockchain series. Myself and Gabriel will be looking at the charts, doing some technical analysis, and I hope you'll be learning along the way. So, Gabriel, what have we got in store for today?
So we're going to kind of bounce off of where we got to the other day and look at the changes in price over the weekend. And we'll go back to the slides that we have for the principles of trading. We'll just hang out and spend time looking at the chart, giving observations, doing some guesswork, talking about we're going to project the prices at the same time as explaining that we really, for trading, we should not be actually trying to project what the price will be in the future. We need to be responding to the current situation as much as possible, as objectively as possible. So that's it. So I can share my screen.
Brilliant. It's certainly an interesting time in the markets. It's not often we get to witness the entrance of a strong bear market like this.
Yeah, and it happened. It happened all of a sudden. So I'm comfortable to share some of my personal portfolio details and explain what I'm doing right and what I'm doing wrong in trading, or at least what's causing my account to go up or down.
That'd be good.
So we'll start with Bitcoin chart, and we're going to scale it back again a little bit because I'm going to take off some of these indicators. We haven't got there yet. We're going to explain some of the indicators that I like. Your mileage may vary, but we'll start with some basic stuff and add to it to give some perspective. We're also going to look at the US 30 chart, the Dow Jones, because there's some correlation, some interesting correlation that's happened fairly recently. It's not always the case that they are correlated, but sometimes the US 30 tends to influence Bitcoin, and then of course Bitcoin tends to influence the rest of the crypto market. So over the past days, we can zoom out. This is the weekly perspective. So each one of the candles, the red and green bars, is a week worth of data. So this is zooming out here. This is going all the way back to 2015. And we start to zoom in. We had, this was the COVID crash of around March 2020. And since then, the US 30, the Dow Jones, the US stock market, has, like, that includes companies like Apple and Microsoft and Tesla and all of the biggest companies, the top 30, has been doing great until the top of the market was January 3rd of this year. Mm-hmm. Since then, it's been downtrending. So interestingly enough, what we can do is split that so that there's two over here. And this is tradingview.com. You can get a free account. I've got a premium account, so I can have more screens than the free account. If I take off symbol, so I can get Bitcoin on one of them and US 30 on the other one. If we go down to the day chart for both of them, so so we can see it's not exact, but there is certainly some visible correlation. So let's go for that, and that is 4th of Jan, which is there on the Bitcoin chart. Okay.
So Bitcoin on the left, US 30 on the right.
It might be the mirror situation. So you should be able to hear this one that I'm doing. My circle is Bitcoin, BTC USD. You can see the ticker symbol up there in the top, yes, in the top corner. And then US 30 is this one on this side of the screen here. So we can see something of a direction that way for Bitcoin, and then dare I draw it that way for Bitcoin during the same kind of time. So that was from 24th of Jan. So it's actually, it fell down, went back up and fell down. So somewhat of a correlation over here. January fell down, whether we want to draw it to there, went back up kind of to there, and it's fallen down over to here. So, and I was watching fairly closely over the past few weeks, and it seemed that when US 30 was strengthening, Bitcoin was strengthening. When US 30 was faltering, Bitcoin was going down with it. Now, I know this is messy on the screen, but giving you that bigger picture context, and we can zoom in, and I'm not quite happy with what I'm seeing right at the moment. And we'll get back to the Wyckoff theory, and we'll look at if that candle there was a spring, we'll get a bigger perspective. But right now, the US 30 is actually looking kind of strong for a rebound, right? We had these like a week. Now each candle is a day. So we had a downdraft of about a week, a potential reversal with a long wick there, and the US 30 is trying to push up. And we can go and look at if I just zoom into that arm, we can see that it's on this level where it touched previously and bounced off, and now we dropped below it, and now we're trying to establish if that's a level of support or not. And so the US 30 is indicating it's trying to go back up to that next point of resistance, which may in fact be a very strong level of resistance, because that white line there, if I zoom in, if I make that bigger for you guys, can I do that? Oh yeah, there it is. If I just make that thicker line so it's more evident, we can see that there's a lot of touches. So there's a clear support and resistance level there. Didn't quite get there, so there was strength in the market. It didn't even come down to that support, but it did touch there. It obviously had problems over here, showing signs of weakness. Rebounded. As it rebounded, it did not get up to the previous highs, which are up there. And now it's fallen clearly below that line, and we're now close-ish. It's like a 1% distance away from retesting that line. So my fear is that the US 30 is going to recover to that level, 33,000 on the US 30, and then keel over, and then come down to this level. So if that happens, I think that would be a leading indicator, and Bitcoin is being very responsive at the moment. I think we could see the same kind of drop for Bitcoin. And what I don't like right now is, look, even though, again, if I zoom into this one, the US 30, yesterday was a good, strong green candle, very strong. And now this is called an indecision candle. I've got too many lines on the thing, so I'm going to take this off. I call it a spinning top, but it's also called an indecision candle when the wick is pretty much long on the top and long on the bottom, and the price is very close to the entry point and the closing point, although the day hasn't yet closed for the US 30, or has it?
And do you often see a reversal in trend direction when you have a wick and candle that looks like that?
Yeah, it's that the story is that the bulls and the bears are battling it out, and no one could decide, right? No one was the winner, because the market actually, by the end of the day, it retraced and there was no actual movement. So then what you do is look at the previous candle, the previous session. In this case, it's a day, and we can see a very strong day. So we can have an expectation that the next day, tomorrow, could paint a continuation approximately the same length as the previous session, which is yesterday, right? So that could be our green candle tomorrow on the US 30. We'll leave it there for now and come back to larger time frame momentum in a moment. But if we carry that over to the Bitcoin chart, we had a few good days of Bitcoin recovery. But today itself, we've seen quite a strong drop. And if we reduce, so let's focus now on Bitcoin. And if we reduce the time frame, say to a 4 hour, we can see our reversal candle, our potential wick-off spring is down there. And then we start to see the battle. And you do not really want to be trading unless you're there on 50-minute charts and you really, really are confident with your risk position management, stop losses, etc. You really don't want to be trading this kind of chop because you're going to get chopped to death. And a lot of people lose money when there's a big downdraft in price, like we saw over the past days. Then they try and buy the dip and then they sell because it starts to go down again. And so they end up buying high, right, and selling low. So that look, it's that recovery. This was a very optimistic candle just here on the 4 hour. And so they might be buying here because they expect that we're going to recover, but then the price starts to go down, and then it goes down all the way here, and then they sell because they don't want to lose any more capital because this is really weak. But then the price reverses and it goes back up again, and this is what happens to a tremendous amount of traders that are doing intraday trading that don't really understand position management, longer time frames, stop loss management, etc. And they will trade even all the way down to 15-minute charts. And so they think that, why try and balance the massive volatility in small zones where your profit potential is only a couple of percent, like this to here. All right, so that's an 8% move. Not bad if you catch it, but you're probably not going to catch the top. You're probably not going to catch the bottom. So you've got the risk of maybe a 5% move, but then you've got all of the risk of the volatility and it reversing sooner than you expect, et cetera, et cetera. So this is where a tremendous amount of people lose money trying to trade. The idea, the principle, one of the principles is if there's been a big shift in the market, then stop trading. And one of the key principles is trade less often, right? And one of the most significant opportunities to trade less often is after a major event, a major move, when the price is then consolidating because there's tremendous amount of volatility. What I don't like is that this big red candle, this day candle, which is today, we were doing well for the past 4 days. So that was a nice reversal, potential spring. It went up and down and retested that level. It went up for a couple of days, and now it's dropped back and it's retesting. Right, we can see the wick on there. Oops, wrong button. We can see that we're retesting that white horizontal line, right? That support and resistance where we had the potential spring, which carries us back. If you remember from the other day, it carries us all the way back over here. Very clear, strong support level. So it might be that to validate the spring and to validate that this is in fact a continued support level, the market wants to retest. Fair enough. But we are, at this point, we are hodling and we are waiting and seeing, and we are scared because it can turn against us just as easily and apparently as quickly as it can turn in our favor if we're long. If we're still in the market, we're still hodling since this downdraft, then we're gritting our teeth, and every day is a different fluctuation, different story. So it's possible that this is another test of that support, and we may get a continuation up, right? Might go up, doing our wick-off story. We might even go up to, this would be kind of a best case scenario because we can see that.
Like Gabriel's gone, but he's coming back. Are you back? Your camera's gone, but I'll put you back on.
Did I drop off there? How long ago?
You had an internet connection loss there, Gav.
I didn't know. I thought I was still on. How long ago? Are you there? Waxer, can you hear me now?
Strange. Technical difficulties.
Let me know, Waxer, if you can hear me.
While we wait for Gabriel to return, just like to remind everyone that this show is not for financial advice. So if you've been following the markets yourself and you have anything that you'd like to share with us, we'll certainly answer those questions in chat. If you've got any alternative opinions to what we discussed today, that'll be great to hear. And now it's time for Gabriel to return.
I don't know what happened there, Waxer. So
it's all right. Welcome back.
I didn't even see any drop in my connection. So
yeah, it was odd. I could see your shared screen with your camera working fine, but on the stream, it wasn't showing up.
Interesting. Okay.
Yeah.
Blame technology. All right. So how long ago was I offline? Was it like 30 seconds or longer?
About 30 seconds.
Okay, so let me just get back to that point. Was basically the point I was making is a lot of traders lose money getting chopped up after a big thing because they're trying to guess if it's going to go back up and down and up and down. If you're still in the market at this point, then you might want to hodl. You might want to hold until you see a decisive move one way or the other. And that's just an unfortunate position if you're still hodling at this point, which many of us probably are. What I think is a good case scenario, a good optimistic potential that kind of still validates the Wyckoff potential for a spring and continuation is if price can get up to this green trend line, right? So that's a trend line from that all-time high, kind of cutting through. If I move back to the day chart, we should be able to see that a little bit more clearly.
And it's not often you see a trend line like that being overcome on its first attempt, do you? When the price reaches it.
100%. Very, very good point. If we do go back up to that point, it's only the second touch, and often it's the third or fourth touch of a trend line that actually breaks. That's good traditional technical analysis. Very good observation. So yeah, if we go up there, and so we're still in the cards for that because today is still just a potential retest of that support, and then tomorrow, given that the US 30 is well, it's an indecision candle today, but if there is a continuation tomorrow on the US 30, I do expect that we will get an upwards day for Bitcoin as well. And then that might be enough to shift the momentum. So what I want to get to today is about moving averages and focus on momentum and maybe look at some other indicators. This one. But let's just paint the worst case scenario. So, well, kind of the worst case is that we do get that recovery, people start buying again, but then you're right that trend line continues to act as resistance, and then the market capitulates and we drop through the floor. The US 30 turns negative. We get another black swan event or some negative news, and Bitcoin could just crumble down towards that 20,000 level as that next key level. That is definitely a scenario that we need to be looking at. So it might mean if you are, again, absolutely, I heard you while I was trying to get back online that this is not financial or trading advice. If you want to manage your risk, there's different ways. So you could manage your risk that the price could recover up to here. That is not only touching that trend line, but it's also meeting pretty much this resistance level, right? If we extend that line a bit.
Yeah.
To there, That is a definite clear area of strong resistance because you've got the trend line and the horizontal resistance level. So you might make the decision, well, I'm going to recoup some of the losses that I've gained by this recovery. And this applies to Bitcoin and the altcoins because the altcoins will follow Bitcoin, and then sell. You might just decide, hey, I don't want to take the risk of it going down again, and potentially from look, that would be 35 to 38 or so. I don't want to take the risk that it's going to drop to 20. So you might make the decision to sell at least some of your position or all of it and wait and see. And then, you know, if there's a miracle, then we could break through that, or we could come down for that. Remember the last point, is it LPS, last point of supply in the Wyckoff methodology, is that we can come down here and then we can actually get through, and that would then be what's known as breaking the creek or getting through the creek. And then we'd be on to the next phase of Wyckoff, and we could actually see a big continuation. My expectation is kind of negative. I do not really necessarily expect that, which in actual fact, my sentiment means absolutely nothing, right? The market has a way, the composite operator has a way of taking the sentiment and doing the opposite, and that's where people lose money, right? So you've always got to be thinking, how subjective am I being? There is an element of intuition and gut reaction that you need, but that comes with experience. And again, we don't want to be projecting too far into the future. We need to be reactive to the reality of the current situation. So we shouldn't have a projection and then turn that projection into an objective potential scenario. We should not emotionally turn that into a position of hope, right? That's the problem. So yes, it might come up and touch that. If it does, it might break through. We have to be objectively prepared to take action if there's particular signals that show us that it's not going to break through, and we want to take some position off the table.
So it looks like ideally we want to kind of stay in this capitulation zone for long as possible, really, at least to extend to what looks like June 20th or so, maybe July, so that we don't meet two lines of resistance at once if there is a retest. Is that right?
Yeah, so the rebound, so it's actually a good point. It goes back to the momentum play again. I don't know that it makes a difference if we do that and build up and go here and then I don't know if that makes a difference if we're going to break down or break through if it happens to happen a bit later. What does matter though is the longer time frame momentum. So let's jump up to the weekly level, and then this obviously looks like a scrambly, even more of a scrambly mess because it's drawn on a different time frame. So we have to keep taking that off.
It's pink lines everywhere.
So the problem here is the weekly momentum is so massively down. Look, 1, 2, 3, 4, 5, near enough, 6, 7, 8 weeks of momentum. If we go back to the slides and look at the ship again, it's that oil tanker that has already been heading forward at full steam in one direction for 8 weeks. It's not easy to turn that ship. So that's why the chop happens. Positive momentum, people start buying, but the overall market sentiment is still very strongly negative, and that's why we get the big downdrafts again and again and again until that momentum. And let's put on some moving averages here. This is one of my personal favored ways to look at momentum, is using moving averages. In this case, I'm using Hull moving averages, and I use the 9 and the 12. So you can plot that on your chart, and you can see it here in the yellow and the purple lines. So when the yellow line is above the purple, then you've got upwards momentum because the shorter moving average is above the longer, right? So you can imagine these are like those boats. The yellow boat is the lighter boat. It's a shorter time frame, so it responds, it moves more quickly than the slower moving average. That's the entire point, and this is the big concept of momentum. Looky here, 8 weeks ago, the momentum was still positive, but we got trapped in that trend line resistance, or it was just forming at that point. And then the yellow line is now below, so price is negative on the weekly time frame. And
is that death cross?
Death cross is when I think it's the 50-day moving average crosses below the 200-day moving average, but it's the same principle. This is just a much shorter time frame moving averages. So and now look, that momentum, the gap widened, so that momentum was accelerating, and now momentum is getting closer together. So the momentum is slowing. If we then drop down to the 3-day time frame, we can see down here, if I'm zooming in really close up front, we can see the yellow line is above the purple line, right? So momentum is trying to shift. The big tanker is trying to move, but it's still the momentum is still linear, still straight line, trying to be a straight line and gradually shifting direction, gradually moving. So this is what we're hoping for, is that 3-day momentum does shift up, but the price has to follow it. The market has to have enough faith to make that happen. Because these things only happen by buying and selling. The reality is always the price. All of the indicators, the fancy gimmicks that we put on the screen, they're there still just to interpret what is happening with the reality. And the reality is, what is the price? What is the actual price, right? So if the market is optimistic enough, or if the US 30 continues up for the next couple of days, then maybe that price can squeeze back up again, and that momentum of the market has more of a chance to shift direction into more decisive, confident new trend. As it is so far, we've still got the weight, especially if we go back to the weekly again, we've still got the weight of that weekly momentum, which is still negative according to those moving averages, right?
Gabriel, do you have access to the 50 and the 200-day moving average, just for the sake of showing extra large votes?
Yeah, so I've actually, this thing has got, so we can change that to 200, so we've got 50, 200 styles. I'll just take off those guys and let's make it pink just so it's super visible, and let's do blue. So pink is now the 200-day moving average. Make it bright. And where are they? We go to the day candle. I'm going to take off, what else can I take off? It's pretty messy because I've got so many lines. Let's do, that hides drawings. So this is the 200 and the 50-day. And so, yeah, this is a good thing to take a look at. We can see the 50-day moving average, the blue line, is super choppy compared to the 200-day moving average. Right now, price is far below. And yeah, so that might be, I can't remember if it's a 50 to 100-day or 50 to 200-day, but that might be considered a death cross, where the 50-day fell below. And you can see price is magnetized by the moving averages, or at least that's how it often seems. So price came down to settle on the 200-day moving average. It touched it. Oops, if I draw, then all of my lines go back on. It touched it there, it fell through, it tried to get back up, it fell through, it tried to get back up, then it fell through, then it touched it for one last time, and that was the capitulation. There the market decided, hey, we are not making ourselves back above this 200-day moving average, therefore we are in negative, we're in a bear market, bear trend.
What happened in the last bear market? Was it a similar process where it was under the 50-day moving average?
So that would be all the way down at $20,000 Bitcoin. Let's see what happened there. So you can see the market you can call it got overheated. It ran away from the 200-day moving average, jumped all the way to 20,000. Obviously the 50-day moving average is trailing it. Then there was a big correction, and look at that. The market corrected to near enough come back to the 200-day moving average. So connected with it there, exactly stopped right on there, and then it broke below, which was a negative symbol. Yes, we did manage to climb back up above, because the direction of the moving average is still pointing up. So the overall momentum is still up, even though price wants to return. It's kind of like returning home to the happy medium, right? And then this shorter, the 50-day moving average, was still positive. So there was still even though there's a crazy price of 20,000, which was, remember we talked about the round numbers on the other call. It was just about, pretty much, this is Bitfinex, maybe on other exchanges it did touch 20,000, but this was just about basically 20,000, a big nice round number. And then look, here's one of those indecision candles. It's, the wick is smaller. Sometimes you see a massive wicks on either side, but that was an indecision candle. That was kind of an indecision candle. And then there was supply where people were getting concerned, and then the market dropped all the way back down, back to the happy medium of the 200-day moving average. Tried to get back above, but no, it wasn't having any of it. Came back down again, and then this one here was clearly moving away from that 200-day moving average. These candles tried to get back to it and failed, and so that's a clear sign that the bear trend, that the market sentiment has shifted. And then we got what looks like the biggest downwards day candle after the market failed to maintain connection with that 200-day moving average. So then we had the big correction all the way down to $6,000. And then look, there's a consolidation zone, right? Difficult to trade, because look, the moving average is chopping, the 50-day moving average chopping over, swinging over the 200-day moving average a lot.
I think that drop there is a good example, isn't it? This one here, 13th of November, 2018. That's such a harsh drop. It looks very similar to what we're going through now.
Yeah, yeah. The market is spent. But let me bring the images drawings back on. So here, let's make this. We've got that one, and then we've got that one. So we can see a triangle formation here. Fairly obvious, fairly clear, and that was a pattern like this with a triangle where price fails to get higher highs. It's making lower highs, right? Each high move is lower than the previous. That's actually that's a bearish sign. Lower. So the bulls are dying, right? The bulls are taking the price less high on each swing. Price is still maintaining support, but that played out textbook scenario where the bulls were dying, and then finally the bears could take it, and so the bears could just push it all the way down. And so it's often a good idea to trade in the direction of the long-term moving average, like the 200 days. So we know, so we can use that as to define what it is to be in a bull trend. Here is still choppy, not very clear. But this is a nice entry. So this is a very nice entry over here. This is a long period of time. This is June 19, year 2019, all the way to more than a year, August, September of 2020. And we finally broke above that resistance here in September, October 2020. And price is above the 200-day moving average. Price is above the 50-day moving average. And the 50-day and the 200, they're leaning upwards, right? So that would be quite a good entry point for long-term swing traders. And then we're following it all the way up. You might get chopped up, you might take profits, and we're going to come to the principle of how often and when to take profits on your trades as we go through this series as well. But some of it, at least, hopefully you're keeping, still holding until you see definite signs of deterioration. And that, and again, this is a really good example. That yes, the 50-day did kind of touch the 200-day. I hope you can see what I'm trying to illustrate there. That 50-day did cross below the 200, but price didn't look awful. It didn't look spent. And there's other indicators that we can use to see parts of momentum. So we might have held because 50-day moving average is still above 200-day moving average. So we're still in a long-term uptrend. And then it's not until here that the 50-day decisively moved below the 200-day. And would you be happy selling at 58,000 when the height was 64,000? You certainly should be. That is that if you entered all the way down here, which was quite clear, and you exited here, let's look at what the gain is. Something around there to something around there is a 300% gain on Bitcoin. Good trade. And that's from November 20 until April 21. So what? Not even a year. November, 6 months. 300% in 6 months. And then look, if you've taken profit, then the 50 days is below the 200-day moving average. That is suggestive of a change in market sentiment. And you might be thinking, hey, I don't want to gamble. I'm going to cash out. I'm going to sell all of my Bitcoin, whatever it is, and wait and see what happens. And then look, you did well because the market dropped down to 30,000. And look, the 50-day moving average crossed back above the 200. And then, yes, you get some chop there. Maybe you did a trade, but you still made money. So unfortunately, making simplistic trading strategies it's not quite enough to be profitable, but it does take you quite a long way to be able to analyze these kind of things. So okay, so let's add another couple of indicators, and that is the MACD. Right, it stands for moving average convergence divergence. And we'll look at it in context of the chart, but just to blow it up and give it a real demo. Basically, there's a zero level, which is right in the middle. And so when the bars, the histogram bars are red, then momentum is negative. And also when the blue line here crosses below the red line, price is negative. In fact, I think, does it exactly correspond? I think it might be exactly the same point where that crosses, but they can cross over higher or lower, so it suggests more momentum. And if it's green, then the momentum is positive. So then we can look at the price chart and see what does the MACD tell us about the change of the market. So right now, we know that on the MACD perspective, on the day chart, for the past 1, 2, 3, 4 days, momentum has been positive. However, the blue line has not yet crossed above the red line, so that suggests still negative, and it's quite far away from the zero level. So again, that also suggests negative. So there's multiple things you can actually read in certain indicators. So this story tells me that the market is trying to move towards a positive momentum, but it's not there yet. It's still negative, but look, it's less negative. Let's say it's less downwards momentum, because the amount of downwards momentum is reducing at the moment. The blue line is getting closer to the red line, not there yet. The red histogram is getting closer to the 0 level, but it's not there yet, right? So let's bring that back onto the chart. See a little bit of that context, and that's awesome. So we can see this was the I'm going to remove volume bars for now. So this was our reversal candle, potential spring. It was the momentum was negative, and the very next day, the MACD started to show less negative momentum. So that helps us to justify that potentially this could be a reversal. Not confirmed yet, but it could be a reversal. This also, and even today's downdraft, even today's drop, still the MACD is showing a positive direction, not positive momentum, less negative. Less negative momentum. So if that manages to cross the 0 and go green, then we can feel a little bit more confident that we might get that rebound in price. And that's what the MACD helps us to show is it's less volatile than the actual price candles themselves. And so it helps to suggest what way the winds are blowing.
And the MACD is volume, is that right? The volume of trading.
It is some mathematical formula which I don't know that relates to volume.
Okay. And by volume is it?
Well, I don't know what. I mean, let's just have a quick look. MACD formula. So it's the 12 moving average minus the 26 moving average. Is that as simple as it is? MACD is calculated by subtracting the long-term exponential moving average of 26 time periods from the short-term EMA of 12 periods. An exponential moving average is a type of moving average that places a greater weight and significance on the most recent data points, right? So it's less relevant what happened 2 weeks ago, but still somewhat used, but that's what an EMA. So you can actually find the EMA indicators, click on this indicators and look for EMA. I use one called a Hull moving average. I forget why, but I just seemed to favor it. Or you can have exponentials. And so the curve of the moving averages will be different. So then you got the question, well, whose 200-day moving average is the real 200-day moving average? Is it the normal one, the exponential one, the Hull one? You've got to look at each instrument like Bitcoin and see what tells you what you think is the best fit. And then that's what you can favor. Okay, so I'm going to bring back volume. Now, the other negative is that volume is very weak. All right, these volume bars, volume is a very important factor, very important consideration. And we see that when we see big breakouts, we should expect to see increasing volume. So if we go back to this opportunity back October 2020, relatively speaking, we saw big volume. We saw increasing volume. You can see that, right? There's a big volume bar, and that was a down day, so it hadn't broken out of that resistance level yet. And then we get above, and then this one here has a big volume signature. And the price is clearly pulling away from that resistance. So that is a very optimistic sign that the market, the bulls are in control. Big price move way above the previous resistance and high volume. And so you might consider that as the buying signal.
So we have low volume at the moment.
So righty-ho, we have low volume, which means that the market is scared, they're waiting and seeing, and which means less activity or news or things can actually just push things one way or the other.
So say over the next 5 days, is there anything in particular that we should be keeping an eye out for, or one, if you're interested in this sort of thing?
Tricky one. So we're looking for confirmations. If the price does drop out of the floor, if we come back below that level that is the spring, what might happen, okay, is regardless of this goes up a little bit or if it just kind of skirts the floor there, if we go down and then we go back up again to touch that level or near it, not exactly on it, but can be near it, then we might be setting ourselves up for the next big drop down, right? And that is a big potential over the next, I'd say, week. If we fail to get it back up here, even if we get up there, we can come down again. If that then breaks the floor, often it will try to recover. The market fails, and we saw an earlier example of that over here somewhere, right? And then that might be the signal that the market is ready to take another dump.
So we're keeping an eye out for those two lines of resistance, seeing if it breaks either one. And if not, I'd say just kind of wait until we see an outcome of that.
Yes.
Right.
Yes. So now shall we go and have a look at other charts in the market? Let's look at Telos and WAX and EOS and Ultra.
Yeah.
So we've introduced some indicators, and we'll layer. There's so much more to tell. We'll just keep layering tidbits on as we do these sessions.
And if there's any indicators or anything surprising that we find, we'll do another live stream to talk about it.
Yeah. So if we take some of this off.
But so far, you were right. It rebounded slightly. We talked about it last week.
It did. It's still, and that's the most difficult bit, is when you think you're right, because again, that's where the composite man will be able to take your lunch. So yes, it did rebound, but it didn't rebound that much. It rebounded a little. And now this even is also considered a retest on the 1 day. So we might now rebound higher than this level of resistance that we've been in. And we might then see it always moves in waves. All right, waves between levels of support and resistance. So, but for now, we're still in play for a potential. My sentiment is that there's a lot of negativity. And look, the US, if we go over here and look at the US stock market, even though that's looking positive, it might do that thing and get up to the 33,000 level. But that might then act as a strong level of resistance. And then my expectation for weeks, as I've been posting on Twitter, is that the market sentiment, the market seems to want to come down to that level and act there as support. Oops.
But of course, anyway. Yeah, everyone needs to make their own mind up and own predictions, and it's something. The market always surprises us, and like you said earlier, you might think it's going one way, everyone thinks it's going one way, and then crypto does the complete opposite. So
Yeah, black swan events, things in the news, new regulations announced, this kind of stuff can definitely throw off your game. So technical analysis, surprisingly, is not the most difficult part of trading. The most difficult part is trading psychology and position management and the discipline of risk management. And we will definitely be getting into that in the coming sessions. But for now, kind of laying the foundations of observations just in the charts. So this is EOS. And much like a lot of altcoins, we see here's the risk, here's the problem. We've still got our 50 and our 200-day moving averages. They're pointing down. Price broke through that strong support level, historical support level, with these multiple touches there and there. And now price went back up, and during yesterday, it pretty much exactly touched on that level. So remember, I just described that. You got that pattern, and the market decides we're not getting back above that level. Therefore, there's so much risk here, and there could be an extended dump of the market, which applies again to the entire crypto market at the moment. One of the other charts I haven't yet explored with you is the Bitcoin dominance chart, which is pretty interesting.
So what's the Bitcoin dominance chart?
This shows the price of Bitcoin relative to all of the other coins combined.
Brilliant.
So we can see, if I try and make this look a little simpler on the eye. Get rid of that. All right, that's easier to see. So this is now a monthly chart looking at Bitcoin dominance. And guess what event this was? The beginning of March 2017. That was the launch of Ethereum. So obviously Bitcoin was the dominant gorilla in the room because it was the only viable tracked crypto, let's say, until Ethereum, and then 2017 was the ICO craze. So a lot of liquidity, a lot of money went into ICOs relative to Bitcoin. So Bitcoin lost a lot of dominance. Then the ICO craze started to come to an end, and Bitcoin dominance went back up again. But then the market was off to the races, and there was a lot of other blockchains, layer ones and things started to appear. So a lot of money went there. And then the market crashed and Bitcoin strengthened up until it's bull run. When Bitcoin goes in a bull run, then the dominance strengthens. And so that's the kind of story. So here we are. Bitcoin dominance has faltered middle of last year with the DeFi craze and the metaverse craze and the gaming craze, and now Bitcoin is struggling to find its footing. So here, it's almost as low as it was, but now it might be starting to recover. If I put on my favored moving averages, I'm not able to load my other things. Okay, never mind. But we can see if we move down to the 2 week. If we move down to the week, we can see that Bitcoin dominance has tested that floor a few times and is getting strength. So, and this is the problem. This is the trap that I'm in, right? Sharing the personal details. My portfolio, I've got a lot of altcoins in comparison to Bitcoin or ETH. And when Bitcoin is in a bear market, the alts move a lot faster, a lot harder than Bitcoin. And we can see like Bitcoin has moved down 3.8% today, and some of these altcoins, Solana is down 7% today. Telos is down 8.5% today. So the altcoins move more than Bitcoin, especially at times of the market. So that's good when you're in a bull run, when Bitcoin's going up. It's better to be in altcoins because altcoins are moving up faster than Bitcoin. And that's what this dominant, the Bitcoin's losing dominance because the altcoins are gaining value faster than Bitcoin. So when so my problem is that I've got so many different coins in cold storage that I don't have capacity or time or effort to go and figure out how to transfer them to exchanges and sell them, and liquidity volumes that are available on exchanges. And so I end up stuck with altcoins that are quickly devaluing compared to Bitcoin and compared to the US dollar as well when you're in a downtrend. So what does this tell us? This suggests maybe that Bitcoin is going to strengthen for a little while relative to the rest of the market, rest of the coins. It might come up to here and get stuck a little bit, and it might come up to here, or it might come and hit this long-term trend line. So Bitcoin might be the stronger play for a short period of time, and then it might get stuck again as the alts start to find their feet and start to go back up. So that's what we're looking for. And so coins like EOS, so if we can quickly look at Telos, it might be that Bitcoin goes down, but Telos goes down faster to find its feet on this level down here, which we discussed the other day, of 20 cents. It's currently trading at 34 cents. So that's something of a 50% possible downwards target for Telos to balance. And that's the start. If we go and look at the Wall Street cheat sheet again, I've got a slightly different version here, but this is the normal stuff. If we can see that in the corner of my screen, we may be at the beginning or the end of a previous market cycle. And so the market gets flushed out, institutions sell, the whales even sell, and they don't tell you that they're selling because they want to do it first. And so they're out of the market. And then we're going to see, and this is kind of humor with very tragic and serious implications for people, because it's painful when there's such a strong bear trend. But this is depression, deeper depression, rector, and ultimate rector, and annihilation, finally ending up in the Cretaceous Paleogene extinction event, right? So humor out of genuinely tragic circumstances for many people, many portfolios. But we might see that Telos can get down to there. And where is that? Is that the Cretaceous Paleogene extinction event? It might not be. Telos might reduce to this lower level here at 8 cents, because that's the beginning of the price chart on KuCoin. So the price has been as low as 8 cents. And then begins the new bull market. And that's what we're looking for. We might be dollar cost averaging. We might be saving our dry gunpowder until we see that positive momentum shift in the market, which we will be covering on our series, no matter how long it takes. Could be weeks, could be months. And then we start to see those green shoots, big buying opportunities. And the optimistic point that I focus on, that I tell people, is not the Fibonacci, right, this one, is that if you do buy Telos at 8 cents, it's like you were buying in May of last year, 2021, at the cheapest possible price. And if it goes up to all-time high again, that's 1,000%. And you can calculate what that means. If you put in $1,000 and you increase that by 1,000%, then you're driving a fancy car, or you could be. So this is the perspective we have to take. We cannot expect an instant reversal in price and a continuation of the bull trend, because that's hopium. And the momentum, hopefully I've hammered that nail sufficiently, the momentum is obviously down. And so what we're doing is looking to dollar cost average or holding dry gunpowder so that we can accumulate these incredible projects for the next bull run cycle. And again, it's like the same point is, and this is what I'm going to focus on for myself, is knowing where to sell, because I should have made the effort to move those altcoins off of my cold storage and captured profit when the profit was good. And so we have to get good at observing what indicators can we use to say that we're at the top of the market when the market is in euphoria, right? It says here, I'm a genius, we're all going to be rich. There's euphoria in the market, and this is the time to take profits off the table. And so that would have been with Telos in the previous cycle, that would have been around here at, lo and behold, like there's the look, $1, round number, right on that level where those candles, those weekly candles, this week went up and touched the dollar, then it went down, then it went up and touched the dollar, went down, broke and closed again, and then it happened there, and then there was some stuff there. We did have this massive, I don't know what that was, maybe some news in the crypto industry or for Telos, but it went up and touched $1.35. Fantastic. Take profit in chunks, and we'll talk about position sizes maybe next session. And you're a fairly happy camper if you've been trading. If you're a long-term hodler based on the fundamentals of the projects that you're in love with, then you don't need to be depressed right now, because it's doing exactly what you want, and Telos continues to grow from strength to strength as an ecosystem. If you're trading the market, then you have to be objective and say, look, this is the zone. If I bought down here in the early days, I could have captured nice healthy profits up here. And so you got gunpowder left to now start to reaccumulate as the market bottoms out, which it has not shown evidence that we've bottomed out yet. So that's some comments.
How's Wax doing?
Let's go to...
Whoa, that blue line. What's that blue line doing?
What was that? I can't remember. Was that on was that our previous conversation? Don't remember.
Is that your secret prediction?
That's my secret indicator, yeah. All of that. So I don't know what this is. Wax. Sometimes the first candles are ridiculous based on how the data is added to an exchange. So we ignore, oftentimes you just ignore the very first candle, although that was a monthly, yeah, you got to ignore what's going on there. So this is the daily candle. Wax had a fantastic run up from 4 cents, a run up of 1,500%. If we zoom in, if we put the weekly, one of the clues that we have to the end of a market is these massive indecision candles. Like if you guys are intermediate traders, then I hope this is noteworthy for you. I expect it is, but this is often a very clear indication of a potential top in the market. Sometimes there may be a continuation, but look, when you've made 1,500% increase, or even if you brought in, say, on this breakout, which is quite late to the game, it's up 200%. Okay, not massive. There, it's up 100%. You've got to get good at taking profits, and again, that's what I need to spend time on, thinking about my altcoin portfolio, and that's what we can discuss on the sessions. But when you see these indecision candles, especially on a weekly time frame, this is very clear evidence of a turn in the market. And you might look at Bitcoin and see what was Bitcoin doing at exactly that time. So that's 15th November, 22 November. Let's go and check Bitcoin. 15 November, 22 November. So Bitcoin had already started to drop off of that level. So if you're paying attention and you're doing that, like, there is an indecision candle. There is a clear supply candle off of that previous high, right? That was the all-time high. And then you go and look at what Wax is doing. And Wax is doing painting these candles. that to me is a clear exit. And it played out exactly like that, because Bitcoin did drop and Wax fell through the floor. Look at that week, that 1 week, it went from 70.77 to 0.46, like a almost 50% drop in 1 week, 40% drop in a week. So this is what we want to get good at, is not trading all the way through, not buying and selling and buying and selling and buying and selling. In my personal opinion, not trading advice. This is my perspective. My perspective is that if you look at the longer time frames, you can not only have less stress, trade less often, check the charts less often, but you get much clearer signals that start to be evident once you add enough indicators together, develop your own trading system, manage your positions, then this is where we can start to see much better profits. And I believe my portfolio will be strengthened in the next bull run cycle, because I have big bags that are pretty much worthless today on a lot of altcoins that I took last year, DeFi and metaverse and games and etc. etc. But there will be another bull run. Some projects might not survive. Unfortunate, too bad. That's the risk that the game we play. But what I'm going to be specifically looking for are the big, clear exit signs in the next bull run cycle. So,
and we'll cover them here on the channel as well.
And we will definitely cover it. And so we're back down here in the doldrums at like 12 cents. Wax did go up. I saw the chart is like showing nice. Look, the market is down and Wax is up. That's nice. So we're looking for a turn, and again, maybe next session we'll look at one of my favorite time frames, which is the 3-day time frame, especially using those moving averages that I can't get back on, but we can see good clear direct. So here I'm on the 3-day time frame, and even here that was the past 3 days was a clear reversal, and we've just started the new 3-day candle today, and we started up. So if the rest of the market does okay-ish, then it looks like Wax is actually showing a very good sign of strength relative to many other projects in the market. We've had a strong past 3 days, and we've started the new 3-day up 5%, whereas the rest of the market is actually down, including Bitcoin. So you start to see that relative comparison, and that can be short-lived, but it looks like Wax is showing a good, clear sign of strength relative to the rest of the market right now, as of today.
Is there any other chains you'd like to look at?
Yeah, just real quick. Did we look at? We looked
at EOS.
EOS. We looked at Telos. We looked at Wax.
Proton.
Yeah. So this is pretty interesting as well. So we've got again, this is on KuCoin. I don't know if Proton has been trading longer than August 21, but that's when it got added to KuCoin as an exchange, and that was right before its epic bull run. Beautiful. If you bought there, and let's test our theory on the weekly to see if we can see potential exit candles. But that is something of 1,000% move in a matter of from August to October, like 2 months. August, September, October. 2 months, 1,000% in 2 months. That shows the strength of potentially the strength of what Proton is working towards. But then he got caught, obviously, in the same bear market as the rest of the market. But prices is fallen back down exactly to that entry level, right? In the part, and this is the 3-day candles. So the previous 3 days has been a very strong recovery. The more that a candle covers the previous candle, the stronger the indication. So here's a good example. We had a green candle, and then look at I think it's called a cloud cover, a dark cloud cover is the name of this candle pattern where the down candle entirely covered the body of the previous up candle. So that's like a reversal pattern. And then lo and behold, price did continue downwards. This one didn't quite cover. It wasn't a white, I think it's called a white cloud cover if the green candle gets a little bit above the body of the previous. So that's not super strong, but it's still relatively strong because it's quite far along the body of that candle. All right, this is a big part of candlestick analysis is you see the patterns, you read the story of the previous couple of candles. So anyway, so Proton, yes, it could be turning the ship now. And we're just going to have to, so that could be the bottom of the market. And then the challenge is, well, do I want to buy what could potentially be the bottom of the market, or do I want to wait and see what unfolds with Bitcoin over the next week or so to see if we're going to, that's always a consideration. And that's also very challenging for trading because I'm pretty good at reading the Bitcoin chart, and I've actually, maybe on another session, I'll show you, like here, I sold some Bitcoin right there, and that's pretty much, that was exactly the right kind of point, because then the market dropped. But I'm a lot less good trade with the alts because the alts move in favor of Bitcoin. So technical analysis applies a little bit less, especially when you're in bear markets or fast moving markets compared to Bitcoin. So again, that's a little bit confusing, but we'll get more into that as we go. I guess we can maybe wrap up around now. It's I don't know how long we've been going, but it feels like about time.
Yeah, over an hour now, but
right.
It was great. I got to learn a lot again. We used some new technical analysis tools, so I enjoyed that. And I think it was good to go back and look at how Bitcoin's acted in the past and how it's acting today. Good use of the moving averages. So I guess we'll be back, Gabriel, in the next few days, probably as soon as there's a relevant update.
Yeah, well, watch out for a potential clarification or some interesting observations, and then we can get back, do some more demos, live analysis, while mixing in some of the tutorial type stuff as well. Good
Brilliant.
stuff.
Excellent. Thank you very much. And don't forget to subscribe before you leave. Bye.